Hey guys, this is Elliot Wave Sage. Let's do a market update. Like always, none of this is financial advice. Always do what's best for you. So the big story is the 10-year. I don't really care about the news driving the moves in the 10-year because there's a lot of competing narratives. It could be government debt that's not able to be serviced and bondholders selling, the Fed higher for longer, you name it. But I don't really care. I just care about the charts, and the charts are showing me that this run-in flat could be finished, and we're going to start heading into this next leg higher. And this is a ticking time bomb for the stock market, guys. Don't let it fool you and think otherwise. This is massive damage to the stocks. Every stock you own, except for a handful, will collapse when this happens, when this plays out. This is gonna happen, unfortunately, because of the sequence we have here with this higher high in B, with this corrective wave. At some point, this sea leg will end, and when it does, the good days in the market are over, and then this sequence here has to finish. In We don't know the damage that it will create across the stock market, but it will create a lot of damage. Uh, and so here we are, and this obviously this cycle's finished, and we're in this new bullish cycle in rates. And now we have one, and now we have a three-way move, and we're up vertical in what you would expect in a three of three. So if we take out this high here, this will set us up for 4.8 and then potentially break in 5. This is not going to be good for technology. Okay? So what's going to work in that kind of environment? Well, we have to go back and ask ourselves, well, what worked in this environment here? Basically from October 22, in the bear market really started right around here when you had the sequence break, this pivot. What worked here? Well, it was energy, right? It was energy. Energy worked, right? The XLE worked, and in certain technology stocks worked that were considered commodity-like. They were basically had such pricing power. They were able to be thought of as commodities, and maybe that's where Apple is going to go and come into play with Microsoft. So maybe that's why you get a more sideways to lower market and not a crash market at first. But I'm just speculating. So could energy run again? More than likely, it would if this is what's going to play out. Now, the the only thing that could happen is coming into this week is this fails and we come back lower and this sequence does not happen. If that's the case, the markets will go higher and potentially much higher. So the Fed has a decision to make. I believe it has the ability to continue the bullish advance in the market. And then, of course, it has the ability to be higher for longer, tougher, talk tough, scare enough people, and then get the rates to create this sequence higher, and then create panic in the bond market, which could inadvertently collapse most stocks. And then they're going to be like, "Oh my God, what did we do?" And so that is a perfect setup for our B wave to start, right? This is a perfect setup. So I do believe this is the line in the sand now. We have a top based on the stochastics breaking. So to negate this, we need to take out this high at 518, 519. And the stochastics clearly have broken on the daily cycle. So this entire leg is done, but it's only in three waves. So therefore, since it's only in three waves, the B wave is in. So it is a moment of truth. So March is going to be a historic moment for the Federal Reserve. It will be go down as either the biggest policy blunder that they've ever made as an institution, where they were too data dependent, too tone deaf to the other sectors, in mainstream America that are struggling with these higher rates, and they either, God forbid, raise rates or this tough talk, and they collapse the markets in this massive B wave collapse as rates skyrocket, right? And the dollar index peaks out, takes another leg higher, and they will history will go back and look at that and say, they screwed up. They were too tight. They weren't, yeah, they were looking at CPI, but CPI is a flawed metric because it's so perverted and it's not calculated correctly. So this is the situation the market finds itself in. So what can negate this? Well, if they can come out with actually something very dovish or maybe even a rate cut and surprise the market, this will come out. And then what will we get out of this? Well, we'll get five waves. One, two, three, four, and we'll get five. If we get five, it can't be a Y wave. It's too extended to be an ABC. The B wave is negated. There is no more B wave. You missed the move, guys. So this is where we are. So this is the last stand. Next week is one of the most important weeks in the entire stock market. The Federal Reserve is going to have a historic meeting that they don't even realize yet, but the technicals are set up for either the biggest policy mistake that they've ever made, which could lead to a rapid collapse of prices all the way back down to SPY 310 within a 3 to 4 month period, or it's going to create a sequence higher with a small pullback back to 405, and then a blow off top, which will probably be an inflationary spike where they lose control on the inflation side. But either way, they lose control. We always knew the Federal Reserve was going to have to pick between inflation or deflation. This is the deflation scenario. The inflation scenario is just a little bit different, but it ultimately will come to the same place just later. It just delays this inevitable. But basically, if they come out dovish and you get this 3, 4, 5, then you could pull back in this ABC here, and then moon, and we will hit targets in the 600. Um, it will be a sight to behold. That's where gold and silver go crazy nuts higher, and the dollar collapses, and Bitcoin melts up to over 100K. That's what this is saying. But right now the charts show two possible outcomes that are about as equally likely. So place your bets. My bet is the Fed will fold and be dovish. I don't think they have the stomach to create this kind of collapse. But this is exactly what happened in 2008 and 9 when they wouldn't loosen conditions and they let the mortgage bubble burst, where Kramer got on TV cursing the Fed and they don't know nothing because they've collapsed. They created that C wave in the market to collapse the entire market after a pretty nice advance, and they just did not come to the rescue. And they were and this is it. You see this, guys? This is it. Look, I mean, it's almost the same setup. We make a higher high right here, new all-time highs, and then the Fed rug pulls the market by being tight and letting shit fail, and then it just that's it. So this is what could be coming, guys. This wave, we're like here. We're like here right now. It's like October '07. This is where we are right now in the market, but it's not the destination has not been set yet. The our future hasn't been decided, but I think next week it gets decided one way or the other. So the B wave is in on the SPY. A couple things that I see right now. I only see three waves. I don't see five. So that supports a potential fifth wave. So, but as you can see, there's only three waves up. So that's an indecisive market. It could go either way. It's a coin flip. So the SPY has left you in a technical limbo. It has not shown you any clue where we're going. But if you look at that candle, it looks like it wants to break lower, which is fine because it could be another three down, and that could be three, three, and then if we get three, then it could create that buy-in opportunity and wave four going into the meeting of the Fed. down here. I'm sorry, the Dow at 38.4, 37.94 here, something like this. So this could happen. So just keep that in mind. The SPY is kind of in the same situation here, and again, we didn't make a lower low here. Well, we only have three down, so again, it's kind of in technical limbo. But if we can pull up and take this high out, we'll have five up from the low at October 2023, and then that would negate the bearish count. There will be no B wave. You guys hoping for a crash? It won't happen. You guys are going to be left behind, and it's not going to be because earnings are great and everything's like hunky dory out there. Your thesis is right. Fundamentally, it sucks. A lot of earnings is not doing well. Companies are struggling. The problem is it's inflationary pump. It's a dollar weakness. It's an everything kind of melt up because of an inflationary, dare I say, hyperinflationary type blow off top, because the Federal Reserve basically will fold. They'll say, we see PPI was high, we see these inflation numbers are hot, but we don't care because we see other data that makes us concerned, so we're done. And we are going to lower. And in fact, maybe we'll take a quarter point off and surprise everyone next week, and then this shit will get really launched. That's the setup. The bull side. The bear side is they're higher for longer. They take away rate decreases in their dot plots and such as that. And then you get this. And at first it looks pretty tame, right? Pretty tame. And then the dominoes start falling because people will start to panic. The dominoes will start to fall one by one, and then it will just snowball into a rapid collapse that they won't be able to stop. And then somewhere down here, they'll panic and take rates, I bet, probably back down to zero again as they panic. And that will probably end the C wave when they finally panic and rates are back to essentially zero. And then we do this all over again. So get ready. This is going to be a wild week. It's a historic week for the Fed. They don't even realize it's a historic week, but it's going to go back down either as one of the biggest policy mistakes that they ever had made here, or it's going to go down as they're keeping the bubble going for longer, which will extend out the super pump, which will collapse later, right? Eventually, you have to pay the piper, so that this delays the inevitable. That's how I see the market, guys. So if you're asking me what's going to happen, I don't know. I just don't know. But because there's mixed messages, you have some stocks and items that show that they need to go higher, and then there's others that don't. And I'll just go through it, and then you're going to have to do what's best for you. You're going to have to decide what you want to do with your money. It isn't just going to go from 510 to 420 in one trading day. So if this happens, we'll get a pretty sharp decline, probably down to 480, with a nice healthy rebound in wave two. And if we get something like that, I would be dumping and shorting into that wave two, and then we would be in full on bear mode until we take this high out at 520. That's how I would trade this right now. I would let this first wave play out, and then on that ricochet too, then you're looking to get out of the market or short. I'm not trying to short it here. I'm still going to hold longs here and just see where we go with it. But if we do take this high out, that pretty much negates this B wave scenario, and we're just going to be in a 5-wave move up. So we'll probably take that high out and pull back down to 508, and then come out of that, and then it's off to the races. And again, it's not fundamentally driven. I think it's a dollar driven phenomena as the dollar collapses in weakness, and that's bullish usually for most instruments. Technology is in the same situation, haven't ended a B wave, very important pivot here, 448. And again, we have a 1, 2, 3, 4. We either get that fifth wave to negate the move, or it's done and B is in, and technology will be obliterated next week. The IWM, so the same thing. So from a sequence standpoint, you have A, 5 waves up, B, you only needed 5 waves up here. You actually do have the sequence. But the RSI does not support this being the top. We never got that that typical C wave scenario. So this actually supports more upside in the market, guys. So this is a bullish. This is counter trend. So we do have some bearish signals in the 10-year, but right now the IWM shows a bullish signal with a buy here. So the IWM is actually showing you we get this super pump. Well, if that happens, that means the Fed fold it, right? Or even surprise everyone with a small rate decrease next week. So it's something like this. So this is bullish. So this is a clue that maybe it's bullish, and maybe this is a four wave and not the top of B. Okay, not the top of B. The IWM is a buy, is essentially a buy. Now, if we come back down through here, I would say that's 5 down, right? And then we would come back up. That would be a trend in the wrong direction, and then I think you could put X here. But for now, it's 2 until further notice. Then, of course, the Hang Seng, we want to keep an eye on that, right? We haven't broke the trend line, but we did break. We do have 5 swings, so that's bullish. That's pretty bullish, guys. Even though we pull back, so that's another clue that the dollar could be showing weakness. And China looks good. So is China going to save the market? Are they going to finally do stimulus? But we should, if we could break out of that, that would be pretty nice. So this also is a clue that leans bullish. So the Russell's leaning bullish, China's leaning bullish. So you have two markets that show more upside is needed in the market, which, given where we are, would negate this this B wave. Now, one of the things to keep in mind is look at the daily, guys, the daily stochastic. This has been a sideways correction in the Dow. So this is another bullish signal that you need to keep an eye on. You see here, you see this, this is RSI bleed off, but the price is actually staying flat. So it's a sideways correction in time. This is very bullish. It's called hidden bullish divergence. Here, and if you look at where this RSI is at 50, the last time we hit 50 was right around November 1st, and look where the price was around November 1st, 33,000. We're 5,000 Dow points higher. Massive hidden bullish divergence in the RSI. So that is actually also a very bullish sign. It's also a sign that this may not be a 4 wave. It could be another 1-2. Now the SPY doesn't show that great of a divergence like that, but if we could bleed more off sideways, that would also set us up for a potential, instead of a 1 2 3 4 5, it could be a 1 2 1 2 and then 3 of 3. So again, those are bullish. So there's 3, I gave you just 3 bullish things that are leaning bullish. Okay, they're leaning bullish from a sequence standpoint. Bitcoin also looks like now it finished this third wave. It looks like now we're in wave 4. So where would you want to buy it? I don't like it here. I'd rather it at 62,005, 60,000, maybe as low as 58,000. This would be a good area, but this would be a 4 and we get a 5th wave. And then again, depending on the RSI reset, it could become another 1-2. It looks like it's just a 4 wave at the moment. Now, because it's 3 up, right? So it's going to be hard to see my label in. But as you can see, we have 1, 2, 3 up. So what does that mean? That means the same thing. It could be a massive flat, expanded flat, where you have an A, a B, and then a C, and a wipeout wave. So how do you know that that's going to happen or not? Well, you don't really know. You don't know yet until we get more data, right? More data. But can it happen? Sure. Let's look at the long-term stochastics. So the weekly cycle is still intact. So you really need to break that before you start getting concerned of that situation. So the weekly cycle is way intact, and the daily cycle too doesn't really show any concern either here. So as far as I'm concerned, it would be the wrong way to label that as a double top. So it's no double top. So until otherwise. Now, Again, if Bitcoin can take out this high at 74,000, it will negate the double top, it will negate the flat, it will create a lot more confidence that the market will be going higher, and there's no B wave in the market. Silver, of course, keeps breaking out. If you've been following me, this isn't a surprise, and we're still pumping. Again, this is bullish. This is really bullish, guys, for the market in terms of weak dollar. Weak dollar is bullish in the market. So here's another sign, a bull indicator. And of course, gold breaking out could also be another good indicator for a bullish sign. So here's another situation with gold breaking out to all-time highs. And again, that's driven by weak dollar, weak dollar. So, and this would make sense if we're going to get a massive inflationary wave because the Fed holds off and they get dovish or they lower rates. And then the big chart is dollar and 10 years. So the dollar index is at a sell area right here in a three-wave advance. So it's just kind of do or die time for the dollar here because if it hits this wave three of three lower, there'll be massive upside in the market, guys. Massive upside in the market if this plays out. But if the dollar index could take out this 104,292, then negates that, then this is just a corrective move and it's going to open up much more upside. And I believe that will really pressure the market lower. So that is also, this is showing indecision because you'll have three. So this is done and you have three. So the dollar index has not made up its mind. So you can't really learn anything from the dollar index. The 10-year has also given us 5 up here. And now we pulled back in 3. And so the 10-year, this has been so far kind of bearish for the market overall. So the 10-year could maybe come up to 4.6 and then sell off, which is very possible. So that could be more short-term weakness in the market, but I do expect at some point we get another swing lower because this just is too short to get this C wave to finish. I would be surprised to see this pump and break that high at 504. But if we do break 504, the market is toast. Then that is clearly we're in the B wave of the stock market, guys. If that were to happen. The other alternative is we don't break this high here at 436 and we just collapse next week. If that's the case, that's super bullish too for the market, and then you get this 1, 2, and you come down in this 3, 4, 5. So, but the 10-year has not made a decision. Now, once we take out this 436, then it should hit 4.6, and if that happens and we hit 4.6, this is probably going to be selling in the technology sector and growth and Russell. So very interesting chart, but it could be set up for a massive collapse in rates going in the next week where the market is anticipating hawkishness and they actually don't get that. Now, like I said, it's a historic meeting next week. The Fed could go down as one of the biggest policy errors of all time if they get too hawkish and they push this yield up, as they'll create a sequence higher, and this could just snowball into a massive rate spike on the 10-year, which could create a lot of dominoes falling in snowball action that they lose control of the market and the market just collapses, like I show you. And that's what the B wave is suggesting. The B wave suggests a policy mistake because they're tied in too high, too long, and they're tone deaf to other data. And I heard, on TV, it's great to be data dependent, but they're too data dependent now, and they're not taking in other factors, other anecdotal information out there, and they're just gonna collapse the stock market, and it'll end up in tears for, again, probably the wrong group of people in the wrong sectors that they're trying to target. But anyway, this hasn't been determined yet. The VIX, as we know, we're looking for this Y wave, which would also be the B wave. And if X isn't on here, then we would get that massive risk-off moment. But if you look at the VIX and these candles on the daily, this is very bearish. This is suggesting, again, more downside in the VIX, and I really do want to see it hit this box. So this also is, again, suggesting bullishness. So if you look across the market, guys, the IWM shows bullish a bullish lean. I lean bullish on the Russell. I lean bullish on China. Bitcoin is undetermined at this point. Silver is bullish. Gold is bullish. The 10-year is undetermined. The dollar index is undetermined. But I haven't found. If you look across the market, I've not found anything bearish except for you have a stochastic break on the daily here, massive bear. This is bearish divergence, but now it's so extreme it becomes hidden bullish divergence. It's gone on too long, so this is actually now becoming more bullish as it bleeds more and more RSI out. So this is actually something that's hidden bullish divergence here. The SPY, now clearly this is bearish, right? So this is, the bears have this going for it right now. This break, boom, back test, now it's down. That's a daily cycle, so that could be massive selling. Perfect to set up this first wave down. So the SPY and the triple Qs are showing that daily breakdown. That's the only bearish signs I could find here, and the rest are bullish. So place your bets. Place your bets, okay? Now, if this daily could breathe down more and this price holds up in this area and it doesn't drop below this line, 407, then it's going to be hidden bullish divergence, and it's actually reloading for potentially a 1-2-1-2 for a 3 of 3. So just keep that in mind. Then just some technology stocks like I like to trade. Apple's sitting in a buy area against this pivot here. Like I mentioned, you have a three-wave move as long as this pivot holds here, and it's holding. So this is this leans bullish as of now until that pivot breaks. Let's look at Google. Google looks bearish to me to finish that flat out. Facebook looks like it needs a little bit more downside in this four-wave here. This four wave, but here you have three up, right? You have three up, so you have a three-wave sequence. So this can also surprise us. But if you look here, the distance is too far, so this lends itself to more upside. So this actually is bullish for the market. The odds of this turning into a flat are almost non-existent. So this is a four wave, so this is actually a bullish sign underneath the market. Tesla almost hit our buy area by a couple bucks. I believe it will hit that next week, and then you'll have to do what's best for you. I'm looking for more like 150, 144. That would be a nice area. The ideal would be the trend line at 139. But you have to keep in mind it could still go even lower than that as long as this low holds at 101. Then Tesla's good, but again, this is a massive correction that should be coming to an end. And then Adobe broke down on earnings. I mentioned a big move on earnings was going to happen. There was a setup, and we got the lower break, and we're looking at 473, 446 for this wave 2. So it's just another buying opportunity somewhere in this area. And now that earnings is behind us, it'll be a lot safer area to buy. This was a very risky setup, and we did get a big move, but it was lower. AMD would love to get it in this shallow connector here. Now, we did get this pump right there that may have it has not negated our connector yet. So this is like kind of a day traded level on AMD. If we can get to it, let's take a look where the connector is. So we do have a new connector here. So we fell short of the connector, which usually means that this bounce will fail. So it looks more than likely that AMD will have a setup that you want to keep an eye on for now of some kind and get this Y wave. But this X has to play out. Now this would be really shallow, but maybe we get a bigger bounce and lower. NVIDIA, this is kind of an ugly structure here, what we have here with this lower low, and then this is 5 up. So this looks like some kind of, A, B, C connector, and now we should be heading down. I would like to get it at 784 for this fourth wave, and that's where I would hope we can get that. Microsoft breaking out, everyone's going crazy bullish, but again, Microsoft, I would be concerned. We still label it as a B wave until further notice, but it's finishing up this 3 of 5, and That's about it for the big mega cap stocks that I want to show you guys today. And What's just some other things out there? So SoundHound's been pumping, right? SoundHound's been pumping. This was personally a good trade for me. And I don't give all my trade setups because when they don't work, everyone gets so mad. But this was just a nice one here where you had the nice three-wave move, right, into this accumulation area, and we broke out of the wedge. You go long, and the rest is history, and essentially doubled your money in about a week. And I played that pretty nicely, but I'm looking to stay in that trade. I don't think I think we'll continue higher. And now, if this three is in on SoundHound, we could go back another leg, but I think that may be too extreme. But if it does happen, this could be another great opportunity at 667 if we were to dump down into this area. So that's another opportunity. Uh, but right now there's really no setup. The setup was here, but if we do dump, this would be a new setup to get that in. But we're in some kind of either wave five or another 1-2-1-2. So we just don't know how this will play out. And this is why you switch instruments to bullish instruments. You stop out at bearish ones, you go into bullish ones, and that's how you have to play this market. You can't just hold on to things, hoping for the best. Shopify, I never liked this structure, so that's why I'm out of it here. Once we broke that low, my system, I'm out. But if we do get a dump like this to 60, 90, 56, I will pick back in it, just like I'll be back in Adobe. And Adobe's a good lesson in trading, guys, and how to trade, right? So you're like, what is this? Okay, so the hypothesis was it was a flat. So what we do is we look at it, we do the extension, and we're like, okay, if it's a flat, we're gonna buy it at 545. So that's where I bought it, 545, 538. And then we're gonna hold it and let it do its thing. And okay, now market opened, boom, you stop out, you're filled, you're stopped out at 524. 542, 524, you barely lost anything because your entry was strong and your stop loss was tight around the pivot. And then, of course, it goes much lower, and now you'll pick it back up at 450 and you'll try it again. That's how you do the market, guys. You just don't buy this shit and then hold it and hope and pray, because it could just keep going. Because, yes, it could come here, it could bounce, it could do the same thing. So this is a lesson on how to trade the market and minimize your losses and not get blown up, have your account blown up. Because you have to, you're not buying at random times. You're not buying like here on the first day. You have to like manage it, right? AI is another good setup coming, guys, that I like. I do like this. Looks like 5 off the low, and then we pull back in 3. I like it at 26.91 with a stop at 23.49. Could we get a SoundHound type pivot pump out of it? Possibly. We'll wait and see. But of course, if we break 23.53, the chart's going to wipe out. It's a dead chart after that. The EVs were really getting hit hard. I know I saw a lot of EVs getting hit. Fisker was one that, again, I remember people were angry when I predicted bankruptcy after we broke this low. Once we broke that low here, here at this 938, and then more importantly at 428, it became a go to zero chart, and that's essentially what's happening. So this is again why you got to pay attention to the technicals. And when you break some of these key levels, grand supercycle corrections can go to zero. They don't bounce all the time. Let's keep an eye on First Solar. The solar industry is obviously gets hurt by rates. It seems that's what it's trading against, and still looking for this kind of grand finale type sell-off here. And then TAN, the same thing, looking for that final push lower. Although this We could put 5 here and then put the 3 here and put the 4 here for one more move, but we'll wait and see how low we can get. And then Neo was looking for more confirmation, and we never got that fifth wave, right? We only got a 3-wave reaction, so Neo still has not um, been clear. That's why I would not, I would be careful. I want to see more confirmation. Confirmation would be taken out this high at 631. That one, if we can do that, then I do like going in on Neo for a long-term hold. Here it's kind of like, you know, again, if you believe in the company, you should be buying it here. But if you're trying to get a good entry, you know, there is risk. But this is a massive pivot that has to hold at 478. If it doesn't, then we're going to just have an extended fifth wave, and it's going to go much lower. All right. Crypto, a lot of people are pissed off about the miners, guys. And the miners are just finishing 5 waves up. So instead of a 1 2 1 2, it just became a 1 2 3 4 5. And as we know, Mara loves to finish between the 4 and the 2, so that would put the buy right at 1238. So I do believe that's a sign that maybe crypto still will be under pressure, at least the miners. So I'll be looking for Mara at 1238. I would not want to buy it here. And then because but it is 5 off the low, so it should continue higher eventually, just as people give up on it. And then Riot is kind of in the same count here, 5 off the low, and then this is just a massive corrective cycle that should finish off right around 758. So keep an eye on the miners. This could be your last chance to get in on them coming up, maybe in the next 30 days, right here for Riot and Mara at, you know, somewhere around $11-10. And then we hope we get that essentially vertical wave 3 price action out. So that's how I look at the miners right now, something like that. So just keep an eye on that here. And some of these other ones, they just need to cool off for now. ETHE was a great buy. Gave this guys this on my channel. This buy here at 17 and essentially straight vertical to 35. So there's the buy. There's the vertical nature of the price. There's your 3 waves. It's probably going to take another swing down, so you may be able to get back in on it again later. BCHG looks like it's finishing up a wave 3, and should looks like we need 1 2 1 2 3 4. Yeah, so this 3 is done. We need a 4 wave and a 5th wave, and you do need to take this this high out on this 5th wave. But this was really interesting because it totally truncated here. You see that truncation, almost like our stock market. It's a sign of a lot of bullishness, right? You see how we broke that low, but price essentially went vertical. So what we had happen here is essentially some type of flat where you had this like A, B, C. So really it was you know, labeled a little bit different way is how I would label this. So when I look at this, just looking at it again here, this isn't really 5 up. This is a corrective bounce off the low, so it's moving in 3 waves at the moment. So what does that mean exactly? If you're trying to understand what I'm saying, is we're looking at something like a WXY, so something like this. It did that, and then it did something like that, and then it did that to here, right? And then it did something, you know, similar like that, and then it did a connector wave like that, and now it's moving. So it's moving in 3 waves. It's moving in 3 waves. Done. And so now you have that. Okay, so as you can see, this three-wave sequence is over, so we should get W, X, something like that. So that's what I'd be looking for. So you can kind of see how we look at the structures and we have to change based on the data, and that's the data. So I'll be looking for something like that now. Um, and that's why it got squeezed out, because people were expecting it lower. Hopefully you weren't trying to short that. But anyway, that's what it is. So I think then I think you have to wait for something like this to play out to get back in on something like this, and I believe they're all going to be similar looking charts. So it's just some crypto, guys. I heard Chainlink was selling off. Let's take a look at Chainlink. How's that doing? I gave you guys the buy area here, right? Accumulation area, and then even the extreme. We didn't quite get there, and then now it went vertical. And yeah, there were idiots saying short it down here. I don't know who, like, I just, it's just hard for me to understand that, but they did, and they said short it, and that was obviously the wrong call. So here we are. We have nice 5 waves there, and then we have a corrective side. So this to me, yeah, looks pretty much completed. Although that, yeah, that's a 1, 2, and yeah, it looks like it's about to finish. So yeah, so it's definitely not a higher degree wave 3, but it's a 1, a 2, a 3, a 4, and a 5. So that's the count in Chainlink, and we have our first 3-wave move down. And technically, it could actually be finished here, but I would expect more than likely a bounce and a failure. But this is an area where it could find support. Okay, and we'll have to wait and see if it finds support. But it could be a bounce and a failure, which would be even better opportunity. But this is an area where it could bounce into a 3 of 3, really a parabolic type move potentially. But this again, be careful. It could still bounce and fail. So I just brought up Chainlink because I heard someone saying it took a dump. That's not really that bad. How about Solinda? Because Solana. How's that looking? So Solana here, our last way we labeled it, we had the 3, 4, 5, the 3, 4, and now we're in 5, 5. So as long as divergence is erased and we still have, let's go to the weekly cycle. Yeah, it's still a wave 5 of 3. So it could be in an extended 5th moment. High risk to chase it here, but it could dump back down to $90, $100 at some point. As this, it could be in a 5th wave right now. So you'd be really careful if you're trying to chase it, which I never recommend doing, but we could get something like that. And obviously it's bullish, and this would be the area of support if you can get back in at 100. You get back in at 100. And if you have been following me, we called the bottom in Solana at 10. The chart technical, we had a technical sign to go long for those who wanted to do that. And now, yeah, to me, this is a 5th wave that's finishing up. But again, if it erases divergence, then it will just keep it'll keep extending. So it's really tough to say. So it's just a couple coins for you guys out there. And I think that's all I'll leave you guys with today. So the market's at a critical moment. I think next week could be a historic meeting for the Fed. They don't realize how historic it's going to be. I think they'll look back at history as either this is the meeting where they lost control and collapsed the market, over tightened, or they caved and they gave in and inflation, some type of dollar weakness takes hold that pumps gold, silver China, emerging markets, all that shit pumps hard, and then some of the commodity like tech stocks like Apple, those go in sympathy, and then it's like, maybe it's like some kind of like stagflation trade, but modern stagflation where, like I said, there's tech companies that essentially are commoditized products that have price and power and trade like commodities in itself. So that's where we don't where back in the 70s you didn't have something like that. So I do think that that's the situation we find ourselves in, uh, and I think the market should decide. The next week I think is a very important week for the market, guys. So that's all I've got, and I'll talk to you guys later. Bye.